In 2012, Eike Batista was the 8th richest person on Earth, $34.5 billion. He drove Ferraris through Rio de Janeiro. He raced motorboats for sport. He promised publicly on record that he would become the richest human being alive. 18 months later, he owed more than he owned, the single biggest personal wealth destruction in history. And the worst part? He knew. He knew the whole time. To understand how Eike Batista lost $34 billion, you first have to understand why everyone believed in him. His father was Eliezer Batista, legendary chief executive of Vale, one of the biggest mining companies in the world. But Eike didn't want his father's legacy. He wanted to build something bigger, so in the 1980s he went to the Amazon, actual jungle, and started mining gold with his own hands. He made his first fortune himself. That story was gold, literally and figuratively. By the 2000s, Brazil was on fire. China was buying everything: iron ore, oil, soybeans. Commodity prices were at record highs. The Brazilian economy was growing 6% a year. President Lula called Eike a model businessman, a symbol of what Brazil could become. And Batista played that role perfectly. He built a conglomerate called EBX Group, 6 companies, each branded with the letter X, the mathematical symbol for multiplication. OGX for oil, OXX for shipbuilding, LLX for ports, MMX for mining, MPX for energy. The architecture was genius marketing. Your investment wouldn't just grow, it would multiply. The X promised it. The crown jewel was OGX Petróleo. In 2008, it launched the biggest initial public offering in Brazilian history, raising $4.1 billion. For a company that had never produced a single barrel of oil, investors were buying a promise, a dream. The promise that Batista's geologists had found massive oil reserves in the Campos Basin, off the coast of Rio de Janeiro. Why did they believe it? Because everything Batista had touched before turned to gold. The Brazil story was real. The commodity boom was real. And Batista, with his Ferraris and his presidential endorsements and his absolute certainty, felt as real as it gets. By March of 2012, Forbes ranked him 8th richest in the world. He went on television and said he would surpass Carlos Slim. He was going to be number 1. The entire country believed him. Nobody was reading the geology reports. Here's the thing about oil. You don't actually know how much is down there until you drill. And when OGX started drilling in the Campos Basin, the engineers started sending back numbers that didn't match the story being sold to investors. By 2011, while Batista was still on magazine covers, internal data already showed the reserves were far below the projections. The rock formations were carbonate, harder to extract from, more expensive to develop, much less productive. The numbers were falling apart. None of that made it into the public filings. Instead, Batista kept going on television. He kept posting on Twitter, telling his followers the stock was undervalued and they should buy more. And while he was posting, something else was happening quietly behind closed doors. He was selling. Between 2012 and 2013, Batista sold 126 million OGX shares, using information that had not been disclosed to the market. Information his own board had confirmed. The flagship field, Tubarão Azul, was producing 17,000 barrels a day, less than half the promised target. And certain key fields would never be commercially viable, not eventually. Never. Brazil's securities regulator would later conclude this was textbook insider trading. He knew the company was dying, he told investors to buy, and he quietly sold. But there was one final move, the one that made everything worse. In late 2012, to stop investors from panicking, Batista made a public announcement. He promised to personally inject $1 billion into OGX if the company ever needed it, his own money. A safety net. The stock recovered slightly, confidence held briefly. That promise was never backed by a legal contract. It was a word from a man who was already walking out the door. The signs were there from the beginning. OGX went public without producing a single barrel of oil. Its entire valuation rested on reserve estimates the company itself had produced, not verified by an independent auditor, Not approved by Brazil's national oil regulator, the Agência Nacional do Petróleo. That regulatory silence was sitting in public documents. Nobody cared. The story was too good. The 6 EBX companies looked like diversification. But trace the money flows and you'd see the truth immediately. OSX's main client was OGX. LLX's port needed OGX's oil flowing through it. Every X company was financially dependent on the one next to it. It wasn't a diversified empire. It was one single bet dressed in 6 different logos. And then there were the share sales. Batista's transaction filings were public record, available to any investor willing to look. A founder selling hundreds of millions in shares while publicly saying buy is one of the oldest warnings in markets. It was sitting there in black and white. A Reuters journalist finally got OGX's chief executive in a quiet interview in late 2012. One answer, buried in the middle of the article: Tubarão Azul was producing 17,000 barrels a day. Not 40,000, not 50,000, 17. Most people missed it. The market did not. The stock started falling, not slowly, vertically. Shares that traded at 23 Brazilian reals at their peak dropped to 17 cents. A 99% collapse when OGX's board finally invoked Batista's $1 billion rescue promise in 2013. He refused to pay. On October 30, 2013, OGX filed for bankruptcy protection. $5.8 billion in defaulted bonds, the largest corporate bankruptcy in Latin American history. Then OSX filed. Then LLX. Every X company collapsed in sequence because every X company had been built on the same foundation. Thousands of employees lost jobs overnight. Ordinary Brazilian retail investors who had bought into the dream during the initial public offering lost everything. In 2018, a court sentenced Batista to 30 years in prison for paying $16.5 million in bribes to Rio de Janeiro's governor in exchange for state contracts. The empire wasn't just built on bad geology, it was built on corruption. In 2019, Brazil's securities regulator fined him 536 million reais for insider trading and banned him from running a public company for 7 years. The man who promised to be the world's richest had become its most spectacular failure. So what do you do with this story? First, never invest based on projections the company produced itself. OGX's reserves were estimated by OGX, not verified by an independent firm, not approved by the national regulator, just claimed. Before putting money into any resource company, any biotech, any startup selling future value, ask one question: who verified this besides the person trying to sell it to you? Second, track what executives do, not what they say. Batista was tweeting buy while his own transaction filings showed he was selling hundreds of millions in shares. Those filings are public records. In Brazil, they're available through the securities regulator. In the United States, check Form 4 filings on the Securities and Exchange Commission's website. When insiders sell heavily while the public story stays bullish, that gap is the real story. Third, diversification means nothing if everything is connected. EBX looked like 6 companies. It was one bet in 6 costumes. Before investing in any corporate group, map who's actually paying whom. If Company A's main revenue comes from Company B within the same group, you don't have a portfolio. You have one domino standing, the next collapse is already being built somewhere. Same architecture, different name, different letter on the door. Subscribe and don't miss the next fall from grace. If this story helped you see what most investors missed, hit like and keep the investigation going. Click the video on screen. Next up, how Lehman Brothers took the entire global economy down with it.